This is the weekly economic and market update for the week ending December 23rd. We look at next week, the 27th. And, are we going to get this Santa rally thing? And, it got me thinking about some of the stocks that many people have traded and made literally millions of dollars off of over the years. And they're bellwethers for kind of what's been going on. And, will we see this Santa rally? It's a little it's a little murky right now. And the two stocks that I'm talking about, we'll take a look at them here. The first one is Apple, which, Apple, it's like it's been making people money for decades now. And, you look at their sheet here and you discover that, okay, back in, who was this? This looks like it's back in August, it was holding up pretty good. We went down, but I mean, it doesn't take long. It was, well, even back here for Apple, 174 and August 17th, and we've come down now to 131. And a lot of people that follow the Apple stock say if it falls below 130, all the markets are in trouble. And so we're pretty close. I mean, it doesn't have too much further to go to hit that number, and we're at our lows. You know, since June of last year. So we'll see. What happens here if things is breaking down. Some people are calling this a head and shoulder here, and that we broke. Doesn't go by my rules, but okay. Everybody, can see whatever they want to see, I guess, in some of the technical analysis. But in essence, Apple would be the leader of any of the growth stocks, and they're beginning to fall out of favor. And I think it's important for people to realize that, we may be transitioning, into other sectors for the future. And, Apple may just kind of be another blah stock like a Procter and Gamble, or, and they're good stocks, don't get me wrong, but they don't have the leadership that they once had. And then the other one is obviously Tesla. I mean, it's fallen off the map. Back in September, on September 21st, it was trading at over 311 points, and now we're at 123. So we're less than half in just 3 months. So these are two of the bellwether stocks for growth companies, and we may just have to admit that maybe there's somebody working in their garage right now to make the next Apple, or the next Tesla, or Google, or whatever it might be. So I just wanted to point it out because I think there is a transition going on between some of the sectors that are not necessarily even sectors, but the stocks that led us for really, for Apple was decades, for Tesla, and maybe not quite that long, but they certainly have been. It's been a very popular car company, and has had unbelievable market cap, greater than Ford and GM at one point, Ford, GM, and Chrysler combined. So, things are changing. But I mean, Tesla, you just look here at this, what's happened over the past few days, even the last couple of weeks, 3 weeks, where it's gone from 193 down to 122. Wow. I mean, that's some serious damage there. So anyway, that's what I wanted to begin with. And so do we see the Santa rally? I mean, we had a big Wednesday, and then Thursday, we'll take a look at these a little bit later, but, gave it all back pretty much on Thursday and a little bit up today. And Tesla was actually up a couple dollars today, but now it's not. It finished down $2.20, so it's really in the tank at the moment. Let's take a look at our investor sentiment. And, this is as of Wednesday night, and we had a pretty good day on Wednesday. So, but you could tell people are even more bearish now. 52.3% are bearish, up from 40 to 44% the previous 3 weeks. And that is not good news, you know, for the way people feel about the market. Now, again, I'm a contrarian investor, so that's why this is greedy here. Only 20% of the people out there, 1 in 5, are bullish. And then you got over half that are bearish. So there's a lot of that going on, and I think that may actually play into hands of helping, because the put call ratios are way up. A lot of people buying puts in anticipation of the market falling, and what that often leads to is a squeeze where those puts get, the price starts going up, and people start selling their puts, to cover them, and then it squeezes the market up. But we'll see. We're in the middle of it now. It did go up a little bit today. All the markets were pretty much up. I know for sure S&P and the Dow Jones were, and we'll see what next week brings. The Santa Rally really was supposed to start today, which we got a little bit of a bump today, but we'll see what happens starting next Tuesday when the market reopens, and see if it continues its rise through typically the end of the week, and maybe a lot of people say it then lasts maybe 2 or 3 days into the new year, and that's the Santa Rally. But we'll see. And then everybody else and that's why a lot of puts, I think, are being bought, is because people are thinking that, boy, once that happens, the bottom's going to fall out, and it could. I mean, that's a possibility. Fear and greed index, we're in the fear. We were in greed not long ago. A month ago, we were at 62. Now we're at 39. And, if the market takes any more hits, we'll start to get down into these areas. And we'll just have to see what happens. It's, there's, even though the market was up today, just felt very, very, very tentative. Everybody, I know some people are selling their losses out so they can take tax deductions. So there's some of that going on. So that affects the market, and will until the end of the year. So if there are big losses that are happening, they could go down like a Tesla, like a Apple, until after the first of the year when we start up again. But anyway, that's the investor sentiment. We take a look at this past week. Let's get back there. Go to this past week. And, building permits came out much lower than was expected. Expecting, I guess it lower than the previous reporting, the previous week. We have a forecast of 1.342 is 1.351. So was it? That's not awful, but you could see it's still the trend here as it's trending down. Let's see what else we got here. The other thing I want to cover is mortgage rates continue to fall, which is interesting with the Fed funds rates rising. They think they being the Fed thinks they control more than they do. It's typically the yields on the 10-year yield and mortgage rates and things like that that play off of it. They're going down while the Fed funds rates are going up. So that should tell you something. What's other interesting things happened this week? I mean, jobless claims came in line. The PCE, when it came out this morning, there was a reaction. the market originally went down, it actually was in line. So in other words, if it would have been higher, then the market would have tanked. If it would have been lower, then the market, if lower than 5.5%, then the market would have um, gone up. And it came in line, and then the initial reaction was nobody knew what to do because it had either been higher and lower for pretty much every other reporting time period. And they forecast some 5.1 or 5.5, excuse me, and it came in at 5.5, and then eventually the market kind of made its way up, but it was very, like I said, it was very tentative investing today. It was an interesting day in that, I saw the market dropped when that came out, probably, I don't know, 1%, and then then it went up 1%, all in a matter of 2 minutes. And so the 5.5% in line, which is kind of good news. It's trending downward. You can see that some of the inflation is going away, at least for the time being. I don't think it's permanent. It'll come back and haunt us next year. But in the meantime, some of the supply chain issues, but the other things that will catch up with us are going to be the government spending, which is it's hard to figure that people are that economically illiterate in our Congress. But that's what we got. Let's see. Was there anything else really? I mean, durable goods was kind of a surprise. It came in way down. I think that threw some people off, expecting it to decline 0.6%, down 2.1%. So that was a pretty big miss there. We had a short-term reaction, kind of drove the markets down for a short period of time. Look at next week and what we have. Anything interesting on here? I mean, inventories, if they're starting to rise a little bit, keep an eye on that. I'm like I said, I'm not into the trade balance right now. Probably talk about later. Manufacturing index is looking ugly. So, a lot of things are looking ugly, but pending home sales down, and we'll see what we get there. But not the huge market movers unless you got something that really falls outside of expectations for next week's reporting, economic data. And let's see what the Chicago PMI is now. They'll report next Friday, so we'll see what they have. But it's obviously on the decline also, so we got that going for us. Right. So my final comment is really this. It's, one of the things I've been forcing myself to learn to do is trade in shorter durations. Now, some people might call it swing trading. Others might do day trading. I'm not really a day trader at this point. I don't consider myself that, but I do buy stocks and then sell them if they make some big move. But there are people that are really stuck to the screen doing day trading types of things. But it may be that swing trading and day trading may be the only way in this environment where you can really make money. Because if you're holding something, for very long, it may come back, it may not. I don't know that Tesla and Apple, for instance, will ever hit the highs that they hit again. They're digging themselves such a low number, and I've already talked about the markets as a whole not reaching their highs, maybe for a couple decades. I've been talking about that for a while, and this is why I think you're gonna have to become a more savvy trader, or at least understand trading well enough to know what you're in. Now, picking sectors that are going to be playing better in Next year's environment certainly is a way that you could potentially get some returns. But we used to, you buy Amazon, you sit on it, and then you reap the rewards, the money. It's not going to be Amazon. It's not going to be Apple. It, it may be something else, but I don't know what it is. At this point, I got an inkling that it's going to be commodities like oil, like rare earth metals, like a whole slew of things that could potentially be the ones that are breaking out. But this is why, I mean, you can do that, or you can sit in cash. But I don't know that there's a big advantage to cash at this point when you got inflation like we have. You're losing to inflation when you're holding cash. So my suggestion is you become a more savvy investor, educate yourself. And like I said, I put links in the description that you can get started on options, on technical analysis, and I'll continue to add as I find other useful materials. They're just free things. I'm not, there are other actually YouTube channels that I think do a fairly good job. So anyway, that's what I wanted to cover this week. Merry Christmas, and I will catch you next week. And remember, there is always a better way.